Hi there, traders. This is Brad Gilbert with today's trading action. It's Wednesday, the 1st of May. All right, now just looking at the calendar, we had the S&P Case-Shiller numbers, right? These are a good historical number. House price numbers, very strong. And that's saw the dollar sort of move a bit more to the top side once again. And that market has really brushed the US consumer confidence numbers, right? So, and they were outside the range. So a bit of bias towards one particular data could be the way the market was set. But if you just come back, I just want to sort of highlight something in particular. Some of the best trading opportunities are around the second tier numbers. And what I'm talking about is, if I just change calendars, we'll easily see it a bit quicker. What I'm talking about is the Aussie dollar, right? And this was started the move in the Asian session. We're looking for a 0.2. It came out minus 0.4. Now, retail sales are a sort of building block to the whole inflation component. And then on top of that, well, maybe slightly weaker Chinese data, and we did see a significant move. Now, this is important to understand because sometimes we get so caught up and bent out of shape trying to focus on inflation numbers when the easiest numbers are there for the picking. These numbers came out up around 65.40, and there's an easy, 60, 70 points on the table there. Even if you got like 40 or 50, it's cash in the tin. So that's something we really need to focus on as we're going forward, not just the high impacting numbers. Now, looking at, so the dollar, it's come back and testing the higher levels here. This is once again, I don't want to give myself a pat in the back, but I have seen BOJ work before. Look where the dollar yen is. It's 157 sort of 70. This is pretty much where it opened on the Monday open. Okay, we did see the spike up to 160, but this is how catastrophic these guys manage things. It's come in, shove it down, and it will ricochet. I wouldn't be surprised to see it back up at 160 in the coming day, right? Easier said than to trade it, but just be aware this is a little bit crazy, and we may see opportunities on the yen crosses if they come in and give it another push. Don't expect too much. They have spent somewhere around 30 billion to try and get it down. So, and this is what they do. They waste money. The dollar is going up, right? So you can't fight the tide. Anyway, I could talk about it for hours, but I've seen it for the last 35 years. It's just an absolute mess. Let's have a look at where the opportunities are today. Now, for those traders looking to rip in, you've got the Kiwi employment numbers. Now, this number can move the market aggressively. If anything, I would be looking to go with the trend, and there's the Kiwi over here on the right. The trend is down. It's already moved like 100 points. There might be something in it. Liquidity stretched. It's one of those ones that you can have a look at, but don't overindulge, right? No big trade size if you're looking to get into it. Technically, it's already moving down. You need it to sort of break down further. Is that going to happen? I don't know. Depends on if dollar yen keeps going up, probably at this stage. Now, as we come through the European session, there's not much on offer, right? The S&P Global Manufacturing numbers, they're the final numbers. Not much usually there, but you come in with the this ISM Manufacturing number is a really good number to see what's going on with the dollar, and it comes out 4 hours before the Fed interest rate decision. Now, no change expected from the Fed. I don't expect any change in the statement. It's business as usual. The numbers are just what they are. They are they're as expected, maybe slightly stronger, but nothing to sort of get them excited and say, we're pushing this back for another year. It's just like, we can't go yet because we're not getting those weaker numbers that we expect. So I'll be doing a bit of a debrief on that. For our members, you can have a look too later in a couple of hours, in about 3 or 4 hours. I'll be running through analyzing and trading the technicals. Okay. There's two important components to consider here. It's the timing and the strategy you're going to execute with. I'll be running through those key components and obviously giving you a Fed interest rate decision debrief. See what, if there's any real major impact from the Fed, something that will impact the Fed's decision. They'll be looking at what's happening on dollar yen and going, oh my God, what are our friends in Japan doing here? Okay, trying to push the dollar down. The Fed would like that. They like a lower dollar, makes the US more competitive. But now it's back up here. Okay, you know what? The Fed they always are interested where the dollar value is, but and it won't stop them changing policy, but they'll be sort of shaking their head going, what a mess they've created. And that's pretty much it. So the Fed will keep the markets pretty quiet. You know, there's always an expectation that there could be something left field. I think there's a short-term potential opportunity around the ISM manufacturing numbers. Make sure you're considering your technicals and the current trading activity. And what that means is factoring in the impact on the dollar, right? The dollar's bouncing because dollar yen's bounced. That's primarily it. So keep an eye on dollar yen. That'll tell us what the dollar's doing, and then you can come back and factor in potentially the US numbers. All right, guys, that's it from me. Sort of pretty exciting still, even though the BOJ have made a mess of it. This is pretty common, but it does have a flow-on effect, right? I think the main thing they were trying to send out was a warning that 160 is unacceptable, and we will do something about it, right? The next thing they do after this, if they, because they generally run out of cash, is they start asking the other central banks to help them, right? Whether they do or not is another thing. It's been a long time. It's been like the 90s since they really ripped in, or maybe actually around maybe 02, 03 or something like that. Anyway, we'll see how that plays out. The markets themselves, just having a quick look at the general markets. Okay, massive sort of risk off as far as the equity markets go. Now Euro, Sterling, Aussie, Kiwi looks like they're going up. The markets have just been reset and they're only 0.1%. They have gone down, right? So don't think the markets are discombobulating. We do have a risk on profile. It's just that the markets have reset and you can't really see it in the majors at this point. So make sure you keep an eye on that as we get going. All right. Okay. So US yields looks like they're slightly up, and across the currencies, well, Aussie sort of down, Kiwi down. Okay. If you are trading the Kiwi unemployment figures, keep an eye on the pairs that are going up and down, because they will be the ones that you want to trade. If it's weaker, trade the weaker ones. If it's stronger, trade the ones that are stronger. But once again, consider these percentage changes have just been reset at the end of the trading day. All right, guys, have a good one. All the best. Cheerio.